With cryptos making headlines every single day, by now you are all probably very well aware of the FTX debacle, which sent shockwaves through the crypto sector, and FTX customers might actually never see their money again. Now interestingly, during all this turmoil, a famous superstar investor, Bill Ackman, actually jumped in and defended Sam Bankman-Fried, the former CEO of FTX. Only to delete that tweet a few minutes later. Ackman then took a brief pause from Twitter after this embarrassing moment for him, as the liquidators of FTX have now confirmed that there are signs of serious fraud and mismanagement. But only around 10 days later, billionaire investor Ackman was back with a 20-page Twitter thread stating that crypto is here to stay and highlighting that he is a small direct investor in crypto projects and an investor in 7 crypto VC funds. So why exactly is Bill Ackman, who is known to follow a Warren Buffett style of investing, publicly sharing his bullishness on crypto? We'll examine exactly this question in this video, and so without further ado, let's get started. So let's start by explaining who Bill Ackman actually is. Well, Ackman is an American billionaire, a hedge fund manager, and the founder and CEO of Pershing Capital. He's known to run a fairly concentrated portfolio of very dominant businesses that to a large extent are based in the United States. As of November 2022, for example, his portfolio consists of just 7 stocks and holdings such as Chipotle Mexican Grill, Universal Music, Hilton Worldwide Holdings, and restaurant brands. His hedge fund has a very strong and consistent track record of generating substantial returns over many years for its shareholders. And so Ackman certainly knows what he's talking about. Nonetheless, I think it is quite surprising that Ackman, who truly follows a similar approach to Warren Buffett, who is extremely focused on the cash flow a company provides, is now investing in crypto projects that do not have any underlying cash flow. So let me just show you a short clip of Ackman, during which he outlines his investment philosophy in basically under a minute.
So we look for very high quality businesses, what we describe as simple, predictable, free cash flow generative, dominant businesses, a business that Warren Buffett would describe as having a moat around it, right? If you believe that the value of anything financial is the present value of the cash you can take out of it over its life, well, you need to know how much cash it's going to generate over its life. So business quality to us is the single most important criterion for determining what's interesting. Because if we can't predict the cash flows, we don't know what it's worth. If we don't know what it's worth, we can't invest. So we figure out what it's worth, figure out how good the business is, how predictable will this cash flows be from a railroad or a spirits company or a real estate company, shopping mall business. And then we say, okay, well, where's it trading? And if there's a wide gap between price and value, you can buy it for 50 cents, it's worth $1.20. Well, then we're going to take a hard look and try to understand why it trades at a deep discount.
So that's Ackman's investment philosophy in a nutshell. To me, this doesn't exactly sound like someone who'd publicly turn from a crypto skeptic to a crypto investor. Now, before we take a closer look at what Bill Ackman has actually tweeted and what I think about this, I'll say that with Ackman, you never truly know what his motives are. And I'd love to know what you think. Why did Ackman make such a U-turn when it comes to crypto? Does it mean that Ackman believes in the long-term future of cryptocurrencies, or is he just currently long in crypto projects for, let's say, a rather short-term trade? Now, to truly understand why it is so odd that Ackman now publicly endorses crypto projects, let's take a brief look at what exactly he has tweeted. After studying some of the more interesting crypto projects, I have come to believe that crypto can enable the formation of useful businesses and technologies that heretofore could not be created. The ability to issue a token to incentivize participants in a venture is a powerful lever in accessing a global workforce to advance a project. The problem with crypto is that unethical promoters can create tokens simply to facilitate pump and dump schemes. It may in fact be that the vast majority of crypto coins are used for fraudulent purposes, rather than for building legitimate businesses. Okay, let's stop here for a second and look at the number of crypto tokens that have emerged over the last decade. Ever since the launch of Bitcoin in 2009, the cryptocurrency market exploded, and back in 2021 there were already more than 9,000 different tradable coins. And that total number of cryptocurrencies has basically doubled again over the last 12 months to more than 20,000 cryptos that were in circulation as of September 2022. Now, why are there so many cryptocurrencies? Over 20,000. Well, if you would ask a Bitcoin believer, he would say that the blockchain technology created opportunities for developers to create new applications, services, and alternative cryptocurrencies, so-called altcoins, that make use of the blockchain technology but try to build on the strength and solve the weaknesses of the Bitcoin protocol. Now, while this sounds good in theory, as Ackman rightly pointed out, the vast majority of crypto coins are used for fraudulent purposes, as highlighted by examples such as FTX, the Luna token, the Celsius debacle, or the Squid token scam. In 2021, for instance, scammers were able to steal a total of more than $14 billion worth of crypto. And according to Bloomberg, around 12,000 coins have effectively ceased trading in 2022, leading to a decline of around $2 trillion in cryptocurrencies. But as Ackman later points out, not all projects are of fraudulent nature. And I'd like to share a rather long quote from him here, so please bear with me to find out what I think about Ackman's thoughts. Despite crypto's ability to facilitate fraud, with the benefit of sensible regulation and oversight, crypto technology's potential for beneficent societal impact may eventually compare with the impact of the telephone and the internet. Initially, I assumed that there is no intrinsic value to any of the tokens, and therefore they simply represent a modern-day version of tulip mania. But after examining a number of interesting crypto projects, I began to understand how a token could build intrinsic value over time. Two examples may help to explicate my view. Helium created a global Wi-Fi network used by Limebike and others to track devices globally, as well as for other users, which benefit by access to global Wi-Fi networks. Helium's global network of 974,000 hotspots was crowd-created by individuals who purchased and deployed Helium hotspots to mine HNT, its native token. Customers who wish to use the network must purchase HNT and burn it, i.e. remove the consumed HNT from its supply of tokens. As a result, over time a two-sided market for HNT develops, in which miners buy hotspots and deploy them around the globe to earn tokens. Users in turn purchase HNT tokens in order to use the network. The more demand for the network, the more demand for HNT. Now I get Ackman's point here. Helium is building the world's first decentralized wireless network to simplify connecting devices to the internet by rewarding anyone to become a network operator, and the network is certainly creating the right incentives for the growth of the network, as those who set up the hotspots will be rewarded with NHTs. And by the way, I'm not going to explain Helium's business model and value proposition in detail here, and instead I recommend you check out the following video, which nicely summarizes Helium's idea in, basically under 4 minutes. And Ackman himself actually also adds more depth to his Helium thesis, but I'll bear you the details here, but I will leave a link to Ackman's Twitter thread and the 3-minute video down below. So what's my problem with this take by Ackman? First, Ackman chose a terrible example, as just a quick 10-second Google research could have shown Ackman that Helium lied about their corporate partnerships, and its partnership with Lime in particular, the partnership that Ackman referenced in his Twitter thread. A Lime executive is quoted saying, "Beyond an initial test of its products in 2019, Lime has not had and does not currently have a relationship with Helium. And also there's practically no end user demand for the network as of now, as outlined by Coffee Siller in this beautiful video right here." Secondly, I just showed you a clip of Ackman's investment philosophy and Ackman's seemingly obsessive focus on cash flow.
If you believe that the value of anything financial is the present value of the cash you can take out of it over its life, well, you need to know how much cash it's going to generate over its life.
Which is exactly the approach that the best investor of all time, Warren Buffett, also follows. The problem with a token like HNT is that the token itself doesn't produce any cash flow. And the business, Helium itself, also generated only around $6,000 of revenue from its wireless network data in June 2022. So the revenue generated by actual demand for the network. Put differently, there's basically no revenue from end user demand. And thus, at least in my view, HNT, the token, doesn't have any intrinsic value, and the intrinsic value of Helium, the business, is arguably also fairly small. And I think that is actually not really what Ackman is talking about anyway. So if HNT doesn't have any intrinsic value, this in turn means that you cannot invest in it. Because if you define investing as the art of paying a lot less for an asset than it is worth, then it is impossible to invest in something that has no intrinsic worth. Sure, it's a two-sided marketplace. There's supply and demand, and thus there is a market price for the tokens. But as Ackman himself acknowledges, this doesn't make HNT a cash-generative asset. It's basically a commodity that, to quote Bill Ackman here, becomes a valued commodity whose price is determined by supply and demand. It's no different from betting on the development of the price of gold, paintings, NFTs, or oil. You're basically betting on demand rising tremendously, but you're not betting on the increase of underlying cash flow. So to me at least, this kind of investing approach doesn't have anything to do with Ackman's actual investment philosophy, which he outlined in the video clip that I shared with you at the beginning of this video. This doesn't mean that such an approach cannot work, but I can guarantee you that over the very long term, commodities will basically only generate returns that are at best on par with inflation. I absolutely agree with Ackman that, to quote him here, with proper oversight and regulation, it, meaning crypto, has the potential to greatly benefit society and grow the global economy. I think the blockchain technology offers tremendous benefits, and the Helium network gives you an idea of crypto's practical use cases. But I've already stated in the video that I released during the crypto peak in 2021 that we have to distinguish between the blockchain technology on the one hand and cryptocurrencies as an investment, so crypto assets on the other hand. The two are two completely different pairs of shoes, and I think any conversation about Bitcoin always gets lost when you don't make that distinction. Now, if you want to learn more about this distinction and what a fairly unknown investing genius, Jesse Livermore, thinks about Bitcoin, I suggest you watch the following video next. Take care.